Oh, hey guys. Ever since I moved back to West Virginia 13 years ago, I've heard people say that the reason we have so much dilapidated housing stock is because of slumlords. But if you drive through the countryside and you see an old farmhouse sitting in a field that's fallen apart, no one in their right mind says that farmhouse is falling apart because a slumlord owns it. Everybody knows, everybody thinks there's an old person that lived there, a family, they died, and their kids didn't want it anymore. The problem West Virginia faces is population loss. Slumlords perhaps take advantage of the situation, but they don't cause the situation. Another thing I hear is that people are buying up homes, letting them rot and fall apart for tax deductions. That's getting a lot closer to the truth, but it's still not quite right for two reasons. One is that homes depreciate at 3.5% a year for tax purposes. It doesn't make sense to go out and borrow money at 5% in order to get a 3.5% tax deduction. It also doesn't make sense to spend money, cash money that you have laying around for a 3.5% return, because if you had that, you could buy government bonds and get a higher rate of return. You could invest in the stock market, do almost anything else and get more money. Two, if you have a livable home, it's in your best interest to rent it out. You don't get to take a tax loss just because the property is empty. So if you have a home that you've spent money on, you're most likely going to go out and try to find a renter. Third thing I hear about are limited liability corporations, LLCs, buying up large amounts of homes at tax sales. Now we're getting really close to the truth. But keep in mind, most homes sold at a tax sale aren't worth very much. They may even have a home on them that's falling in upon itself. The homeowner knows he can't sell the property, he can't afford to demolish it, so he just lets it go back to the state. However, a certain percentage of these homes will actually be livable. It's just that the person who owned them maybe fell on hard times and couldn't afford to make tax payments anymore. So let's imagine that you have 12 homes that are sold at tax sale. 2 of them are livable, and 10 really aren't in good condition, aren't worth anything. You could say that the 2 homes that are good are worth $60,000 and you rent them for $1,000 a month. That's $24,000 a year in income that you get. You have to pay tax on that, unless you can claim that the other 10 are also worth $60,000 a piece. Then you can claim enough depreciation value on those homes to pay to mitigate all your tax liability. But if you're going to claim that you have 10 slum houses worth $60,000 a piece, you need to have some kind of documentation to show the IRS that you paid $60,000 for these houses. So what you do is you take your 10 slum houses and you sell them to another LLC for $600,000, and then they sell you 10 slum houses for $600,000. You may even own both LLCs and be passing them amongst yourselves. But the point is, you have to be able to show the IRS something. You're creating a paper trail. You can't involve a bank in this process. They will not loan you $60,000 for a non-existent house. So you already have to have the 600 or 1.2 million yourself. This means that your average landlord in Clarksburg is not engaged in this kind of activity. However, there are some actors who are. It doesn't do you any good to claim a tax deduction if you don't have any income in the first place. And this is why I think a lot of times the city will target good homes owned by a slumlord, as they're trying to deprive them of income. They're hitting them in the pocketbook. The problem is that corporations, LLCs that act like this can own homes all across the state of West Virginia. So even if they're good homes in Clarksburg are targeted, there might be one in Huntington or Fairmont or Wheeling that's bringing in the revenue. It's also possible that the revenue isn't even really coming from rent. They're claiming renters that they don't have. They're going to the bank with cash that they earned from drug dealing or illegal gambling operations or something and saying, my renters paid cash, here it is, and creating a paper trail, an illusion of money that way. It's money laundering. I do want to add, since I made that last statement, that there are some LLCs in Clarksburg where every single property they've owned has been a drug-involved premise. It's very possible, if not likely, that the rent they collect is actually the proceeds of drug sales. It's not the ones that are the most infamous that you're thinking about, but they do exist. Most LLCs are probably not engaged in blatant money laundering. What they do is entirely legal. It's loopholes that are written into our tax code. So what is Clarksburg supposed to do about it? In the past, they've tried to target these people, but it's created huge lawsuits, civil rights violations. Fortunately, the state auditor, J.B. McCuskey, and I think State Senator Weld of Wheeling, got a law passed this spring that says companies that have a history of code violations, who have ignored a demolition order, who are delinquent on taxes themselves, can't buy properties on the courthouse steps anymore. How that's going to play out in reality is a good question. I mean, what does history of code violations really mean? That seems like it's a lawsuit waiting to happen, but we'll see. The other thing is that, as I said, most of the houses sold on the courthouse steps aren't worth anything. There's this assumption that there's going to be a legitimate buyer for these properties, but it's not necessarily true. We'll see. Holler at you later.